Let's talk about what is happening here. We are seeing yields rising really quite sharply in the bond market. That's rippling through into the mortgage market. How's that then rippling through into the rental market? What are you seeing right now?
Well, thanks for having me back. And what we're seeing is a continued strength in the rental market. We've seen a really strong run up over the last year. Rental rates year over year are up for 1 and 2 bedroom apartments between 26 and 27% year over year. Now, what we have seen is really a slowing down of that increase. Since January, we've only seen rates go up across the market by about 2 to 3%. And in fact, we saw the first decline month over month in this past month, with 1 bedrooms declining by 0.3% month over month and 2 bedroom 0.4%. So we're starting to see a moderation in that. I think it's more just a fact of the vast increases we've seen already over the years. And then also now you're starting to see a weakening of the consumer.
We're looking at a chart here that tracks rents. And you're looking at 1 bedroom rental prices in New York up 46%. These are huge numbers. Long Beach, California up 62%. Where is the top? I mean, at some point, people just cannot afford this.
Yeah, and that's what we were talking about. Really, those are year over year numbers, and those are really in the major markets that have increased the most. One thing to point out is that really in the Sun Belt and then some of the really larger cities like in New York City have seen massive increases year over year. We're starting to see those modulate as well. The other thing to note is that a lot of those increases are in the upper level. So the tier one properties. And so what we're going to see coming forward is a lot of inventory coming online. That'll be new inventory, typically going to be more expensive, and will bring those higher rents. And what that'll do is, as you look at the overall averages year over year, it'll continue to push those, even if in the middle tier they may stay more modulated or even begin to decrease as we see the impact of inflation on the consumer spend.
John, what kind of a gap do you currently see between rents and incomes?
We've actually seen, the amount up until last month, rents in terms of a percentage of income have stayed about the same. You've seen over the course of 2021 pretty significant income increases as well. And so rents really went along with that. But as we said, really the effective income is going to come down as we have inflation hitting people's pocketbooks much more. And so really it's more of a wait and see at this point, but we anticipate seeing that start to tip to the other side.
John, during the pandemic in 2020, we saw a lot of movement out of cities into places like Miami, Connecticut, New Jersey, for example, more suburban areas. Well, Miami is a different story, and I wonder if you still see that kind of trend in the rental market, or has that topped out?
We see that trend continuing, but what I'd say is people have also moved back into the major markets as well. You have some markets that are actually seeing declines. But there's demand all over. And so we really do have, I wouldn't necessarily say it's a housing crisis, but there's certainly a shortage of housing as we begin to catch up.
Okay, so we've got a shortage now. We're seeing very strong demand. That's pushing prices up. That's the upslope, John. What does the downslope look like? How severe do you think it'll be? Is this going to be a kind of a shallow slowing, a kind of topping process? We stay at these elevated levels for a while, or do we crash back down? If you're looking a year out, 18 months out, what kind of shape do you think this market's going to be in?
Yeah, I think that's a really good question. And I think it really depends on the tier of apartment and rentals you're talking about. I think you're going to see probably an impact on the lower levels where it will begin to decline. We think that August, we're going to start to really see a sort of a resetting of a baseline for mortgages. I don't necessarily see a crashing of them, but I do think we're going to see increases decline and really begin a new baseline. But look, the potential for recession, prolonged inflation at the levels that we're at, it's a little bit anyone's guess what that would have as an impact on folks that are renting.
John, this might seem like an obvious question, but what is actually driving the increase in rents? Is it a supply? Is it a demand issue? What's your best read on that?
So, we're going to really look over the last year because, as I said, we've actually seen a small decrease in the last month. But really, it's all things, right? This is sort of the perfect storm. You had huge liquidity from the government going into the market. You had a very strong consumer. You had, almost unprecedented wage increases, certainly in a lot of the industries. At the same time, you had a work from home environment where now suddenly people want more flexibility to be able to move. And you had home prices increasing at almost unprecedented rates. So it drove all across the board the ability to really price in that demand.
John, a lot of people are looking for ways to diversify their portfolios. They're trying to figure out how they should insulate their portfolios against inflation, against the potential for a slowdown as well. Do you think rental real estate is one place they should be looking?
It's a really good question, and I'm probably not the best person to ask because I'm not an investor on that side. My own thought is, you still have to finance those properties, and with rates increasing at the rate they do, it is probably becoming less of an attractive asset than maybe it was before. You've had mortgage rates increase 55 basis points week over week. We're up to 5.78 week over week. And so I think perhaps a lot of the juice that was in that as an investment is started to move out of it. And in terms of if you're getting into it now.
And then to add on to that question, John, over the last few months, there's been a lot of talk is like, where is the hidden leverage, right? Like, we're not going to have an '08 again. We won't have a 2000 again, but we're going to have something as a result of all this easy money. What kind of leverage are you noticing within the housing market? Do you see anything along those lines, particularly in the renters?
In terms of leverage in the market, where I think the opportunity with what we're seeing now is going to be in finding those properties that maybe are still undermanaged, that really have an opportunity to increase value. I don't think you're going to buy it purely from financial leverage as much as you're going to do it from operational leverage, much like we saw with a lot of the private equity firms that were buying very cheap in '07, expecting just to have some sort of a financial leverage turnaround, and ultimately they needed to operate the businesses better.